the one that we can actually control, the one that actually is a lever that I think is, realistic, which is more brokers. We talked about branch one, branch two, join branch two, right? Why not? Come on, we can do it. And, this PNC scenario, I think that's probably what happened, is that not enough of the local home and auto insurance shops, joined the internet rush and was able to really grow and scale and do great things. Let's not follow in those footsteps. Let's have it so we can be an industry where the majority, not the minority, but it is the minority right now, I promise you. But let's try and change that, where it's not the minority as it is right now, but the majority are tech adopters who are able to use these tools, who are able to grow and scale and do these things. But that's up to each of us. It's up to the industry to say, hey, we are going to have more people in branch two than we are going to be in branch one. And that's going to protect the individual broker who's a solopreneur and providing for their family. It's also going to protect the innovation in this industry. Hello, everyone. Welcome back to another episode of Mortgage Tech Talks. Today, I stare into my crystal ball a little bit, and I talk about a 4-step process. It's one I just made up. There's no trademark or anything to it, where I think we could be going down. And it's a little bit of a scary road, I'm going to be honest. Don't worry, it's not the road that, your job is taken by AI. We'll save that for another episode. But it's something I think a little bit more subtle, and the risk is much, much higher. And I know it's higher because this has happened in other industries that we have worked in the past. And it creates basically an environment that has zero innovation and really is kind of a stifled industry, if I'm being honest. So I lay out that path. I talk about what leads to it. It is technology related, and really the steps we can take as an industry to slow that down as much as possible. So it's what I'm passionate about. I think you'll like it. We'll see you on the other side. Hi, everyone. Coming today, showing you a series of steps that I think could be possible in the next, call it 5 to 10 years, that could really, really stifle the mortgage industry. And it's something that I really, really worry about. So I'm going to lay out all 4 of these steps, tell it almost like a bit of a story. I'm going to show you how this has actually already happened. This has happened in other industries already. So this isn't just me, hypothesizing what could this has happened before. And then maybe a bit of a silver lining. How do we maybe prevent it from happening? So let's get right into it here. What are the 4 steps? So step number 1, a new advanced technology gets introduced. So obviously why it's relevant, obviously why I think this whole series of events could happen over the next 5 to 10 years. We are on the precipice. We are kind of in the first or maybe second inning of a new technology platform, of course, being AI. So it doesn't have to be AI, right? In the example that I gave where this happened before, obviously it wasn't AI that did it. But of course, in today's environment, what I'm talking about and why I'm thinking about this and I'm worried about that is, in fact, because of AI. So that's step number 1, kind of already there. That horse has kind of left the barn already. And I'm not too worried about that. I mean, that's an eventuality. If it wasn't AI, it'd be the next technological thing. Technology will always keep progressing, and that's fine. Step number 2. Okay, now we're on step number 2. So some brokers adopt this new technology and some do not. And I'm going to call it from now on, there's the non-adopters, branch 1, I'll call it, because I'm saying there's a branch. So there's 2 branches, they split off. Branch 1 is just the non-adopters. They keep doing their thing. And then there's branch 2, which are the adopters, the people who actually use AI. Quick side note, I don't think there's a branch 3. I think there's a lot of people out there worried about branch number 3, which is just like these AI agents. And I don't know who's controlling them. Maybe it's the lenders. Maybe it's the government. I don't know. People are like, AI is just going to take my job. And there's just these people running around, these AI agents running around and just scooping up all the business. I could spend a whole podcast saying why I don't think there is that third branch. But the long story short is I think people trust people. And if it relates to buying an Apple or something, I can go to the self-checkout. I'm okay with that. Because if I mess up my Apple or I pay too much or pay too little, no one really cares. The store doesn't care and I don't care. But if it's a home purchase, I pay too much or pay too little, or I get the title wrong, or I get the wrong insurance, or I don't close on the right time, these things have very, very serious consequences. So in a high stakes environment, like purchasing a home, people want to trust people. They don't want to trust machines. That's been true forever, and that'll continue to remain true. So the value you provide as a mortgage broker, of course, is the trust for you as a human can, I guess, instill in the client, the person on the other end of that transaction. And that's not going away for sure. So let's forget about that third branch. But that second branch there, these are the people who are adopting the AI. And what those people then are able to do is they're able to apply their trust, right? The trust that they're able to develop with their clients, but they're able to do it at scale. So what I mean by that is historically, trust is a very hard thing to establish, right? It requires a, conversation. It requires usually looking someone in the eye. It usually requires all sorts of back and forth and referrals and things like that. For me to trust someone, it takes time and it's very quick to lose it, right? But what technology waves allow people to do is to do different things at scale, right? I mean, the internet allowed you, and your email allowed you to send thousands of emails at once, right? So you're able to do that communication at scale many times over again. So the question and the prediction maybe I'm saying is that second branch will learn how to build that trust at scale. I think podcast is a way that that's not even AI, but people are doing media, and that allows you to apply trust at scale. But, I talked about it in previous episodes how you could actually make like an AI clone of yourself where you train an AI of kind of the basics of what you usually talk about with a client. And you can have that as, a chatbot on your website. So someone can come, you can have a conversation with you in your voice, with your opinions. And then only when they ask something that maybe you didn't train that AI clone on, okay, then, you book a call and now it's a 5-minute conversation, not a hour conversation, because that 55-minute difference has already been handled by my AI clone, right? So the branch number 2 is able to build that trust at scale. Now, branch number 1 hasn't been left behind, right? I always talk about and shout out again, my mother-in-law, she's a broker out west, and she doesn't use technology, and that's okay, right? I mean, for sure. Right now, she's doing a ton of business. She's doing great. The phone rings, she picks it up. She does the deal the same way she's been doing the deal for the last 15, 20 years, and that works for her. And there's nothing really against that. I have nothing bad to say about that style of doing business. So, branch 1 is fine, but branch number 2, they're applying the trust at scale, so they're able to grow much, much bigger operations. They're able to do the thing that differentiates a broker from a faceless bot, which is build that trust, but they're able to do that with many more people. And so their business grows and grows and grows. They become, much more efficient, and you get economies of scale, right? So you're able to, do things very quickly. A simple example is like your compliance, right? You know, just doing one file per month, let's say you have to do compliance for that, whatever that takes time. But if you have 10 files that you're doing a month, it's not going to take you 10 times to do 10 times the amount of time to do your compliance. I don't think so, because it's not perfectly linear, right? It takes time to kind of get your mind in that mindset. Okay, I'm doing compliance right now. I got to get my docs together. There's a little bit of this startup energy that's required. So whether you're doing one file or you're doing 10 files, that startup energy is the same. So, and the other thing that you might do is that if you do have 10 files you're doing, maybe you hire an assistant to do it, right? And now you have the money to be able to hire an assistant, so it's not your time anymore. So you're able to apply trust at scale. And then with that scale, you get economies of scale because you're able to do, many things at once more efficiently. Your per file cost has just gone down, right? So they're just, it's a snowball that just keeps rolling and rolling and rolling. And, where are they taking this business from? Maybe from the banks, maybe a little bit from branch 1. But again, I think branch 1 is pretty okay, at least right now in this story that I'm telling. Okay, but this is the most critical part. This is the key of this whole story that I'm telling here. Step number 3. So lenders and regulators, so 2 really important bodies in our industry, the lenders, of course, who actually provide the mortgages, and then the regulators who watch over it, they see branch number 2. So they see these guys who are just doing so much scale, they're doing so much business, and they're saying, great, now it's time to demand a little bit more from the broker channel. So what do I mean? Let's get specific. What do I mean by that? So lenders, let's start with that. Now, they look at branch number 2, and these guys, because they have such good processes, because they're having these economies of scale, they're able to produce files and submissions in a very consistent way, in a very clear way. And in a sense, they almost start training the lenders on the other end of the transaction to expect these things in a certain way. And this is happening. So I was actually on a panel this week, Pure Lend AI. We had Lucas on a couple of weeks ago, and he told that story. He said, and they help with submissions. They actually generate reports and things that can help with the submissions. He said, and it's an AI tool, right? So definitely people who are using Pure Lend are people in this branch number 2. And they're getting these economies of scale and all these different things. So many people are using the platform now that certain lenders out there are expecting these reports, right? So, and I guess maybe more specifically is that if an underwriter sees a file come in with one of these reports, it's going to pick them up first. And so, okay, they're picking them up first now, and that's great. But now, whatever the executive comes in and say, hey, why are you able to process these ones so much quicker than these other ones? Maybe this is the manager of the underwriters. And they say, well, for these ones in this pile that I get from branch number 2, I'm able to do very quickly because it's a standardized way they're doing it. It's very complete. They've used AI to validate different things. I'm able to do these ones very quickly. Whereas pile 1, these are people who's are still doing it the same way they did it 30 years ago, and it just takes a little bit longer. And is there a scenario where then that manager of all the underwriters saying, "Hey, I want to get more efficient. We can only accept files that look like this." That's a very real scenario, I think. Absolutely. Or we can commit to certain SLAs, right? Service level agreements. We can get back to you very quickly if you do it this way. Maybe they don't cut it off completely, but hey, I'll do a 1 or 2 day turnaround if it looks like this, or it's going to be a 1 to 2 day turnaround if it looks, not like this. I think that could very well happen. So that's one thing on the lender side. So lenders become a lot more picky and they demand a lot more from brokers because they're seeing these branch 2 people are being so efficient and submitting such great files that they start expecting that and demanding that from the whole industry. And now the other group I talked about was the regulators. And I just think regulators, they always want more oversight. They always want more oversight. If they could, stand over your shoulder and watch every single part of the transaction, they would. Why wouldn't they? Right? They love control. I mean, I'm not maybe a huge fan of regulators, and maybe you hear that in my voice. But I think it's true, right? The more oversight they can muster, they can. But what's stopping them? What's stopping them from looking over your shoulder? Well, it's too resource dependent, both for the regulator and for you, right? If I have to every single email I ever write, download it and upload it to some regulator portal, well, I'll never do that, right? So there's always this push and pull where the regulator wants more and more, but the industry kind of pushes back and says, we literally can't, right? We're going to not be so efficient. But you see where this is going, right? So the regulators are always wanting more, always wanting more. They might look at the industry and they might say, okay, there's branch 1 and there's branch 2. I'm going to look at branch number 2 because, again, these guys are growing so quickly. They probably do 80% of the volume in the whole industry, maybe more. And they can handle a little bit more regulation. They can handle me looking over their shoulder a bit more or uploading more documents or whatever it might be because their business is so much more efficient. So if I can do this new regulation and 80% of the industry is going to be okay with it, again, in terms of volume, not brokers, well, I'm going to do it. I always understand that if I introduce a new regulation, yeah, there's always going to be some drop off, but there's a threshold I'm okay with. And so new regulations come in place and they come fast and furious because, again, these people who are able to apply trust at scale and have these great businesses are dominant. They have a lot of volume and they're actually just operationally able to comply with these new regulations. So the regulator says, okay, perfect. Let's keep doing it. So where does this go? Of course, step number 4, where this leads to is basically branch number 1, the non-adopters, they just fall off, right? I don't think it's going to be right away. But I'm just sitting there and, I worry about maybe, in this doomsday scenario, someone like, I talked about people I'm familiar with on the West Coast, they're looking there and they're saying, well, my files now used to take 3 days. Now they take 2 weeks because they're at the bottom of the pile. I have way more compliance to do. I got to upload all these documents. It's just not worth it for me. I'm going to hang up my skates. I think that's a reference that only works in Canada. And maybe I'm going to go do something else, or maybe I'm going to retire or whatever it might be. And just lenders and regulators demanding more and more. For some people, they just won't be able to keep up, right? Because they don't have that technology to do it. And so that's a scenario I worry about. Am I just Mr. Doomsday? Is this something that just, is in my head? Maybe. But I do want to caution or at least draw the attention to people to the PNC, that's home and auto insurance industry, where this dynamic has exactly played out. So real quick, what has happened in this industry? Well, where is it at right now? Well, basically, the industry is dominated by big shops, big, and I'm saying 100 plus people of salaried employees, right? So they're brokers that they have that they work under their brokerage. They're not, agents that are commissioned that can move around and do different things, that are really kind of solopreneurs who can control their business to do whatever. They're salaried people. They, work at this company. They get a paycheck. Maybe there's a little bit of a bonus based on, certain things that they do, but they are salaried employees. And why were they able to do it in this industry and it hasn't yet happened in the mortgage industry? The answer is that when you're buying a auto loan or a home loan, again, that's kind of like the category of buying an Apple. It's like, okay, I don't need that trust as much, right? And so when you don't need trust as much, scale becomes easier, right? So this exact dynamic played out maybe probably when the internet came out, let's say, call it, I don't know, I'm just speculating on the timing, but probably, there was a time where the home and auto industry was kind of like this, where there's all these local people everywhere, in their local communities. But then the internet came out, and now for me, someone in Toronto, I could do a home policy for someone in Timmins up north. For the people in Ontario know Timmins, and that wouldn't really matter, right? Because the Timmins person doesn't have to meet me. It's like, whatever. I just need a car policy, right? I don't need to go down the street to my local guy. Having that face to face, building that trust with my insurance broker. I don't care, right? Not really. Not with a car insurance. At least not me. I just go to Sonnet and I do it now, right? So yeah, what happened is those people who were able to scale up very quickly, basically that exact thing came out. And now we're at a place, like I said, where there's these big shops everywhere. And we used to work in this industry, and ask people, what's stopping someone from just coming on and competing with you directly? Or what's your competitive? Why do these 100 people work for a salary for you? And the answer is access to markets, right? What's a market? It's like a lender. It's like an insurer, right? So these big shops, they have access to more and more insurance companies, insurers. And because of that, they can dominate and they can be big and they can just put people on salary. And that's just the way the industry is now. And just to round it out, you might say, hey, is this bad? Who cares, I guess, right? So maybe some people are going to come along and they're going to scale up. And then all the brokers who used to just do, 5 to 10 million a year commission, they just become salaried employees of these bigger shops. Does that matter? Well, maybe not. I mean, it's your personal preference. I like solopreneurs. I think that's a very important part of just the economy and all those things. But the huge thing from a tech perspective is in that industry, there's zero, and I mean zero innovation. The tools they use to, interact with the insurers, like the Filogics and the Velocities and the Finmos, they are just so archaic, right? They're more archaic than the most archaic thing you can think of in the mortgage industry, right? And they don't have APIs and they don't have all these things. And the reason for that is because it takes so long for big organizations to make decisions. Right? So in the mortgage industry, a new piece of tech comes along, like Blue Mortgage, let's say, and many small brokers are willing to take a chance. And then we're able to get a foothold and we're able to grow and iterate quickly and learn. And then new technology is built from that. But when you're just selling to a couple dozen big shops, as a new startup, you can never sell into it and you can never get traction. And it just, there's no dynamism in the community there. So I don't think it's a great thing, at the very least for innovation. So that's the 4-step process. But okay, what's the silver lining thing? How does this not happen? So the first way this doesn't happen is my hypothesis about trust at scale fails, right? Basically, like the internet didn't let you apply trust at scale, right? I couldn't now build that trust. I still had to meet people. Even in the age of the internet, I had to meet people and build that trust in a more fundamental way as a mortgage broker. So does AI change that? Does AI now allow me to apply that trust to many more people than I could before? Maybe not. But if it's not, then this whole thing goes away, right? That's, I think, step number 2. So no trust at scale, this whole thing dies. Okay, so maybe not. I don't know. That's more of just I think a coin flip in my mind. Number 2 is that the regulators and lenders don't demand more. They don't say, hey, I know that there's this group over here that's doing really well, but I care a lot about this other group. I want a dynamic ecosystem. I'm going to relax my requirements. Me, I'm skeptical about that. I don't think regulators ever want to relax their things, but I think for us as an industry, we should push back on regulation. I'm not going to make this show about, my, mixed opinions about regulators. But the point is, I think if we want to avoid this future, at every turn, we should, as an industry, start where we can in a reasonable and respectful way, push back against regulation. And then the final one is the one where I'm a bit more hopeful, the one that we can actually control, the one that actually is a lever that I think is realistic, which is more brokers. We talked about branch 1, branch 2. Join branch 2. Why not? Come on, we can do it. And this PNC scenario, I think that's probably what happened, is that not enough of the local home and auto insurance shops, joined the internet rush and was able to really grow and scale and do great things. Let's not follow in those footsteps. Let's have it so we can be an industry where the majority, not the minority, but it is the minority right now, I promise you. But let's try and change that, where it's not the minority as it is right now, but the majority are tech adopters who are able to use these tools, who are able to grow and scale and do these things. But that's up to each of us. Right? It's up to the industry to say, hey, we are going to have more people in branch 2 than we are going to be in branch 1. And that's going to protect the individual broker who's a solopreneur and providing for their family. It's also going to protect the innovation in this industry. So that's my little rant there. We'll see how it goes in the next 5 to 10 years. Maybe someone will play this clip back and say, you were completely right, Tommy, or you were completely wrong. And I guess we'll find out. But I hope I'm wrong. And I hope that, we have more people in branch 2 than branch 1. And this industry keeps being as dynamic as it is. So I'll leave it at that. Thanks so much for listening. We'll see you next week.